to Simply Forex, the channel dedicated to you, the trader. We want you to be successful in the markets. Today, we are going to look at two of the most important things in trading. These are two things you have to focus on with every trade, and that is your money management and your risk management. Again, guys, if you like this vid, if you could subscribe to the channel and like and share with your friends, that would be greatly appreciated. We're going to look at some examples now from my money and risk management from Friday's trades. Okay, so let's take a look.
So guys, this is going to be a really important video to help you with your money and risk management. All right, so we're going to look at a couple of trades I took on Friday. Okay, so Friday, the 8th of October. All right, so this is the US dollar CAD. This is the hourly chart, and the blue arrow is indicating my entry candle. All right, so this was my entry candle on Friday. Okay, so the white line here is my entry, and the red line here is my stop. All right, so as you can see, yeah, I have roughly a 20 pip stop loss. Okay, then my target, guys, was this green line. As you can see, it was a successful trade. All right, so from the entry down to the green was around 37 pips. Okay, 38 pips. All right, so that was my trade. So let's look at the money and risk management. So as I showed you, I'm risking 20 pips and my target is potentially 38 pips. All right, so let's do some maths. Let's do some arithmetic to understand the risk and money management. So guys, let's imagine my starting capital for the day is $10,000. All right, and I am willing to risk on each trade 2%. So 2% of $10,000 is $200 per trade. All right. The US dollar CAD trade that I just showed you, we had a stop of 20 pips. Yeah, so therefore each pip should be $200 divided by 20 pips. So each pip is worth $10. Okay, if we think of this as our lot size or position size, then this is 100K. All right, the 100K is approximately $10. Okay, so this tells us our lot size for that trade, considering we are only willing to risk $200 or 2%. Okay, so my risk is 20 pips or $200, and my target, as I showed you guys, was 38 pips. But let's round that up to 40 pips, just to keep the maths simple. So I risked 20 pips. This was my stop, and my target was 40 pips. So my risk was 20 pips, and my reward was 40 pips. So that is a risk to reward of 1:2. I risk 1, my reward is 2. Okay, you do need to consider commissions, guys, and spreads at this point, as they will be taken from your profits. All right, so this trade was successful. I entered here, I risked 20 pips, roughly 20 pips, and my reward was 40 pips. Okay, all right, and my risk in monetary terms was $200, and my reward probably won't be $400. It will be less than that because of commissions and spread. Okay, so a good example of managing risk and our money. Okay, let's have a look at another example of risk and money management. So on Friday, this was another trade that I took. So on Friday, I entered a short, off this candle. Okay, this candle, one with the blue arrow. So this red strong negative candle. All right, so at the close of that candle, I entered. The green line is my target and the red line is my stop, like the US dollar CAD. So I entered here. All right, I entered here on this white line and my stop was 32 pips. Okay, all right, and my reward was 38, 39 pips. Okay, so 32 pips was my stop. Okay, again, my money management doesn't change. That stop will still be $200. All right, so looking at the GBP sterling Australian dollar trade, my stop is 32 pips. So each pip should be $200 divided by 32. So each pip should be worth $6.25. Yeah, with the US dollar Canadian dollar, it was $10 because we had less pips as a stop loss. Okay, but for this trade, $6.25 for each pip. So therefore, our lot size or position size should be 60K. Okay, which is approximately $6.25 per pip. So each pip is 60K. So my risk is 32 pips on this trade, or $200. And let's say my target, I know it was 38 pips, but let's say my target was 32 pips. All right, so my risk is 32 pips. And my target or my reward is 32 pips. So the risk is 32 and the reward is 32. So this is a risk to reward of 1:1. Okay, so here, I entered here, I risked 32. Which is $200, and let's say I made 32. So risked 1 and my reward was 1. Okay.
So hopefully those examples on the US dollar CAD and the pound Australian dollar have helped you better understand your risk and money management. Another very important thing is to imagine this, okay? So your risk to reward is 1:1. If that's the case, you have to be right half the time. Okay, so if you have 4 trades in 1 day's trading, 2 are winners and 2 are losers, you will be break even if your risk to reward is 1:1, minus some commissions. Okay, whereas if your risk to reward is 1:2, you only have to be right 1/3 of the time. Yeah, let's say you made 3 trades for that trading day, 2 are losers and 1 is a winner. Because the winner has double the amount of reward, then that is equivalent to the 2 losers. So again, you are break even. Okay, so yeah, these are important things to understand. In summary, guys, you have to understand what you are willing to risk on each trade. Okay, your money and risk management are paramount to your success in the market. So I hope this vid has helped and the examples that we looked at. If you like the video, please subscribe to the channel and like and share. That'd be greatly appreciated, guys. See you next week.